Hey, good morning. Let's go over today's trade plan. So in the overnight session, we saw that ES continued to balance above the 2200 high volume node and eventually ended up taking out yesterday's high of 09.5. At this point, heading into the open, we have initial resistance at 09.5 to 1175, and that takes into account yesterday's high, the open gap at 11.25, and then the all-time high at 1175. So the markets are at a short-term inflection point. Now, given that we're near the all-time high here, it's going to be important to keep an eye on the other markets as well, because if we're going to get a sustained breakout in the S&P, then ideally you also want to see upside in Nasdaq and the Russell, and a lack of participation by the other markets would make it a riskier breakout in the S&P. So heading into the open, the 09.5 to 1175 is really the key resistance on the upside, but with the understanding that the buyers are dominant here, and as long as we're not seeing any clear-cut weakness in the other markets, then we could just balance and then eventually still actually head higher. So if you're watching Nasdaq, keep an eye on 48.68 to 48.70, and in the Russell, keep an eye on just yesterday's low and the overnight low, which is around the 1325 to 1327 area in the Russell. So on the downside in the S&P, we have the aggressive area of support at 2203 to 2205. Now, it only makes sense to initiate a trade at the aggressive area of support as long as we're not seeing any warning signs in terms of the other markets or the advanced decline line or the NYC tick. So if we're not seeing any warning signs, and let's say the tick is holding above zero and the AD line is still holding some pretty positive values and the other markets are holding up as well, then we could initiate a long at 03 to 05. But because we're trading near the all-time high, keep in mind that the long setup at 0305 only makes sense if, again, there aren't any warning signs and the day is still setting up to be in a way where the market can still actually break out above 09.5 to 1175. So, if we're slamming back down to 0305 on strong downside momentum, then the area is going to call for caution. Or if we're heading down there with the AD line in negative territory and heading lower, then again, it would call for caution because we are trading at pretty aggressive prices here. Below that, we have the 2200 high volume node. We have the overnight balance area low at 2275 to 01.5. And then the initial support zone on the day is going to be 96.25 to 98.25. And that marks the bottom of the recent 3 to 4 day balance that has been developing within this smaller range here. And responsive buyers can defend 96.25 to 98.25 as long as we're not seeing just excess weakness on the day time frame. So by default we are still going to give more edge to the buy side, or at least understand that the larger time frame bias continues to be bullish. So that means even if you're not being aggressive on longs, at the very minimum, we're not going to be overly aggressive on the short side. Overall, in bullish environments, long setups tend to work much better. As day traders, we can consider shorts as well, but they're not typically going to work as well as longs when the overall environment is quite bullish the way that it has been. So, heading into today, there are a lot of things to keep in mind. Keep an eye on the underlying momentum situation, the other markets, simply because we're at this important inflection point of 09.5 to 1175 near that all-time high. In terms of the econ calendar, we have the oil number out at 9:30 a.m. Central Time, and then there's also supposed to be a press conference regarding OPEC around, I think, 9 a.m. Central Time. I don't think it's an exact time, but somewhere around 9 a.m. Central Time, there's supposed to be a press conference, and that can have an impact on oil, which rallied in the overnight session and I'm sure contributed to the upside that we're seeing in the S&P here as well. So a lot of things to keep in mind, like I said. So keep an eye on the other markets. Again, we're going to favor longs unless we see clear-cut signs of weakness on the day time frame across the board. But if we're not seeing any signs of weakness, if the other markets are holding up well and ideally heading higher, then at the very minimum, we're going to be conservative on the short side. And then in order to be aggressive on longs, we need to see the underlying momentum situation be clearly positive and supporting the upside. Because in order to break out and again get that sustained breakout, not just a breakout attempt, but to get a sustained and a positive breakout here in the S&P, you are going to have to see sustained upside momentum. So that means the tick holding above zero and printing some decent upside values, right? So a tick that's printing plus 300 is going to make for a risky breakout attempt. But if we're seeing plus 6 to 800 on the tick, then it would be much more supportive of a continuation move higher. And if the AD line is trending higher and the other markets are also participating in the upside, then the environment really starts supporting a sustained upside move. And keep in mind that beyond 1175, there is no hard resistance, right? That's the all-time high. So there is no hard reference level beyond 1175. At that point, it's really about range exhaustion, which wouldn't really be hit until 2075 to 2275. By that point, we're exhausting the range and really kind of maxing it out. But beyond 1175, we don't have any reference level that we can really look to use as a target or hard resistance. So those are the main ideas heading into the open. Let's see how the other markets hold up here off the open. Keep the econ reports in mind, and we'll take it from there.